Hello, everybody, and welcome. This is Tushar Chande. So this episode is a fire drill, and fire here stands for flexible, integrated, rapid exits. So as a trader or an investor, one of the most critical decisions you have to make is when to exit a position. And I'll take you through a whole bunch of alternatives that are new and interesting and adaptive and flexible. So let's get started. So a gentle reminder, past performance is not necessarily indicative of future results. And with any of these exits, performance will depend a lot on how you integrate them with your entries and your trade sizing. So this is sort of a standalone discussion of the exit strategies themselves. Now, it should be obvious that for every investment or trading process, you must know what to trade and how to trade, which means you must be able to define your entry rule or rules, your exit rule or rules, and your trade sizing rule or rules. And let me offer you some interesting solutions for the Trend Spider platform. Now, some of you may only trade one or two markets like indexes, but for the rest of us, we can use a chat scan, which is the Chande absolute trend strength in a scan to decide or identify which stocks or ETFs are trending. For entry rules, you can use adaptive channels or bands. For exit rules, you can use volatility-driven exits or parabolic-style exits. And for trade sizing, you really have to define your own risk profile. So here are some unique and exclusive strategies for Trend Spider. The first is FAMA, or the fully adaptive moving average. It can be used as an entry or an exit. Then there's the PALS, or the parabolic long only exit stop, which is tied to channels. Then there's ParaBob, where Bob stands for breakout buddy, which is an adaptive Donchian channel. And I've combined that with parabolic long and short exits, which are tied to the channel. And then there's the paraband, which is again parabolic long and short exits tied to bands built using the FAMA adaptive moving average. So a range of very exciting options you can use to build unique strategies. So just some reminders and notes before we get started. The charts I will show you will plot the exits with a one-day lag because tomorrow's exit is available today. These exits and indicators can be used on any time interval, whether from 1 minute all the way out to a year, if you wish, and they can be critical components of any trading strategy. So let's get started. So I'm using the GoDaddy weekly data, symbol GDDY, for the next several charts simply because they've had a fabulous move up and an equally fabulous move down. And in real time, there's no way to know when the top is going to occur. So this is a very important thing to understand, that in hindsight, we know where the top occurred. But in real time, we would not have known that this was the ultimate high for the move. And that's the role of exits. They get you out without having to know when the market has actually topped. So here I've used the FAMA, or fully adaptive moving average, with its default values, but the width of the band has been set to 0. So all you can see is the actual moving average itself. And clearly, the dotted line would have given you an excellent exit, either here or over there, very close to the absolute high of the move, without ever actually knowing when the market was going to top. So as a default option, as a first choice or an initial choice, it's really extremely powerful to use FAMA with just its default values. So this is GDDY weekly data with the PALS indicator, the parabolic accelerating long stop. So this only gives you a stop for long trades. And here's the things to note. It starts over there near the bottom of the channel and then moves fairly rapidly and accelerates and always moves upward towards prices. So the next slide will give us a little more context. So this is the parabolic accelerating long stop. And the important thing to note here is that it starts at the lower channel and accelerates towards prices, is always moving higher, like the parabolic stop logic. It can use steps of different sizes. The step size is not fixed. It can take big leaps or small leaps. And the size of the move depends on the distance between the high at a particular point and the value of the trailing stop at that point, and then the accelerating factor and the maximum size of chunk we're allowed to take. So we can start by taking smaller chunks and end by getting to some point where we're taking, say, 20% of the distance as a chunk and no more, so that you can control how the exit ramps up, and how large a bite we can take. So essentially, you can control the speed of the exit. So this is an example of the Chandek roll exit. It looks completely different from the parabolic exit because it doesn't accelerate constantly toward prices. It flattens out when the prices are flat, and it accelerates when the prices are moving. So when the prices are moving, it can take big giant steps. So let's look at it in a little bit more detail. So we're still on weekly data for GDDY or GoDaddy. This is the Chandek roll exit. The formula is the highest high minus some constant K times some measure of volatility. You can measure volatility as some measure of average true range or standard deviation, and you can play all kinds of games in defining what you will accept for the measure of volatility. But once you have that, you're merely multiplying that by some constant and subtracting that from the highest high. And of course, you can flip it and add it to the lowest low. But for now, just for simplicity, this is a long only exit. So the exit follows the upper channel at a constant multiple of the current volatility. So the multiple is the same, but the volatility value itself could change. So the price, the stop can move closer to the highest high or away from the highest high based on the volatility. So typically what happens is the volatility is low at the beginning of the move. So it's closer to the highest high. And then towards the end of the move, the volatility has built up, so it's a little bit further away from the highest high. The whole idea of this exit is that when the market consolidates, you can absorb that volatility and still remain in the trade. So you're more likely to catch the trade or the full extension of the trade. And again, it's merely the highest high minus some constant K times volatility. And you can define volatility, 1,000 different ways. So this is the para-bob indicator. Bob stands for breakout buddy or adaptive downtrend price channel. So when we have an upside breakout, we paint that area green. When we have a downside breakout, we paint that region red. And unlike PALS, we have a parabolic exit for both the long trades, which are the pink dots, and the short trades, which are the red dots. There are a couple of limitations here. The first is that the number of options for speed are limited. They're not infinite, they're only 5. And then the adaptive channel can be configured in any way you want. So a lot of flexibility on the price channel, i.e. entry side, but a little bit less flexibility on the parabolic stop or the exit side. So in theory, this could be an integrated solution that gives you an entry condition and an exit condition that are integrated together. So a quick summary here, we have the parabob or the parabolic breakout band indicator, so an entry condition and an exit condition combined. We have an adaptive price channel integrated with parabolic long and short exits. So we are still with GoDaddy weekly data, but we have now changed the indicator from the parabob to the paraband. Now, what does that mean? We have fully adaptive pharma-based bands, which are this green line, the blue line, and the red line. In this case, we have a 2x band above and a 1x band below. And what's interesting is that the parabolic exits that I've shown you on other indicators are now integrated in with this indicator. What that means is that for short trades, the starting point is the upper band, and for long trades, the starting point is the lower band. And even if you change the multiplier from say 2x to 3x or 4x or 1x, the starting point will still remain attached to the upper band or the lower band, as the case may be. So again, a powerful solution that integrates entry conditions and exit conditions into a single indicator. So again, a quick summary. This is the TC para band indicator, which is an adaptive pharma band with parabolic exits attached to the upper and lower bands. So very flexible, very powerful. Now, this is an interesting chart because I want you to focus on where these pink dots start and where they end. So we got a perfect exit with default values for a different combination of entries and exits. And here, this is the parabob plus indicator. And the plus means that you have greater control on the speed of exits than just the parabob indicator. So this gets complicated. In one case, I've given you fixed combinations of 5 speeds. That's the parabob indicator. And in the other, you can choose infinite number of exit speeds, and that's the parabob plus indicator. So we are still using the adaptive bands as a building block, but we can combine them with different exits with a single speed or a few speeds versus infinite number of speeds. And what's the value? Well, look at this perfect exit, which you couldn't have dreamed of doing because there's really no way of knowing when the market was going to top. So again, a quick summary. The Parabob Plus indicator has infinite speed selection. That's the difference. Fixed speeds or a small number of speeds versus an infinite number of speeds, which gives you direct control over speed of exits through the ramp length and the final step size. So lots of power and another variant of the same concept. And I'm just going to emphasize that speed concept again by saying that this is still the Parabob indicator with infinite speed selection, but I've changed the limiting condition of changing the maximum byte size or step size to 25% of the distance between the high and the stop versus 20% in the previous line. And you'll remember that with the 20% byte we got out over there, with the 25% byte we get out a little bit sooner, maybe slightly lower. So the point is, you don't know what the perfect exit is going to be, but by design, this Parabob Plus indicator gives you much finer control on exit speed. And of course, we can expand the concept of the infinite number of exit speeds with the para band indicator. So we had that with the channel. Now we can attach the same concept with the band. And again, here we have the band 2x on the upside, 2x down below, with the exit starting point attached to the upper band for shorts or the lower band for longs. And again, you can change the speed thing to anything you want. So much more control on the speed of the exits with either the channels or the bands based on your preference for entry conditions. Okay, I understand all of that is very confusing. So I have distilled that into a single table so you can kind of see, how the things are set up. So the first line here is farmer, which is a moving average. The starting point is whatever the default value is, or whatever the average value is for the defaults that you've selected. It can be used as a long exit or a short exit. It is adaptive. It has infinite speed range because you can change the values of the speed of the exit. And the step size is adaptive. That is, it changes how quickly it moves. The PALS uses the parabolic algebra. It is attached to the lower channel. It is a long exit, but not a short exit. It is adaptive, but the speed range is limited. I only give you like 5 choices, but the step size is still variable. Then there's the Chandrasekhar volatility exit, which is highest high minus k times volatility, or lowest low plus k times volatility, where k is a constant and volatility some measure of volatility. It can be attached to the upper channel or the lower channel. It's both a long exit and a short exit. It is adaptive, but again, the speeds are somewhat limited because you're limited by how you calculate volatility and your multiple k. But the step size is variable. When the channel expands, the stop moves with it. Then we have the parabob and the paraband indicator, which again use the parabolic algebra. It is attached to the upper and lower channel or the upper and lower bands, both for long side and short side exits. They're both adaptive, but the speed choices are limited. So, it doesn't give you infinite control on speeds. And of course, the step size is variable. And lastly, there's the Parabob Plus or the Paraband Plus models, where again, parabolic algebra connected to the upper or lower bands, both for long and short exits. Both are adaptive, but you have infinite speed. So it's a choice of whatever speeds are built in or being able to pick your own speed of exit. And of course, the step size is variable. So yeah, it looks complicated, but when you break it down by design, you see that we have a moving average, we have a long only exit, we have the volatility-based trailing stop, or you can integrate the stop with either a channel, which gives you the Parabob or the Parabob Plus, or with a band, which gives you the Paraband or the Paraband Plus. Now, I mentioned that these exits or indicators can be used on any time frame. So I'll show you 3 examples using 3-minute charts. And I'm using the paraband indicator. So I'm using bands, and then I'm attaching the short side or long side exit to the upper band or the lower band. And this is NVIDIA with a 3-minute chart. And for example, if you're short here, you have a nice trailing stop and got a pretty decent exit. And of course, you would have re-entered the trade and so on. So that's an example that you can do it with a 3-minute chart if you wished. This is GILD, or Gilead Sciences. They had some pretty sharp moves recently, and this is a 3-minute chart. So again, the accelerating exit attached to the lower band would have given you a pretty decent exit, and maybe it would be obvious to you, but now at least you have a mechanical rule. And of course, it gives you both short side trading stop and the long side trading stop. And this is silver, which has been quite volatile recently. The big sell-off that started the recent crash. Again, you can see the trailing stop here, and then a little rebound. Again, you can see the trailing stop there, and then the selling continued. Again, you can see the trailing stop there. So this is the para band indicator with fixed speeds. This is all these were with a speed of 1. You can see that with the speed of 1. So the idea here is that these combinations of indicators and exits can be used on any time frame, and I explain them using the GDDY weekly chart because it's just easier to see them working on a longer time frame, but you can just as easily see them on a shorter time frame. So a summary of the unique / exclusive strategies for TrendSpider. You have FARMA, which gives you the fully adaptive moving average. You can use it as an entry or an exit tool. The PALS indicator, which is a parabolic long only tied to the channels or price channel. Then there's the parabob indicator, which is the breakout buddy or adaptive downchain channel, and gives you long short exits tied to the channels, starting from the lower channel or the upper channel. And then the paraband indicator, which is the parabolic long short exits tied to farmer bands, and you can have them with a fixed speed or infinite speeds. So we are back to the fire drill, flexible, integrated, rapid exits. In summary, you can use FARMA or PALS or paraband or parabob, parabolic exits with bands or the channel, and then the paraband plus or the parabob plus, which is infinite choice of speeds with a parabolic exit connected to a band or a channel. And some of these are exclusively on TrendSpider. Thank you for joining. I hope you'll experiment with them and find the combination that works well with your trading. Thank you very much.